Here is an overview I want you to pay attention to. So I want you to look right now on the screen here. So this is how Form 4562 really looks like, at least the top part of it. So everything revolves around depreciation and amortization. So long story short, depreciation is all about tangible assets, and amortization is all about intangibles. I'll explain later on. So you have to put your first name, last name. So this is the names that are shown on the return, and you got to put your business or activity to which this form actually relates. So in our case, in our hypothetical case, we put real estate development, and you have to put your identifying number. So this can be your social, it can be your tax identification number, your TIN, or it can be your EIN. But in our case here, we put our social. Again, everything's here is fictional. It's it's a really hypothetical. So part one really is pretty straightforward. So you put the maximum amount that you have to really claim. So here we put $850,000, and the total cost of a Section 179 property placed in service. So here we are putting 1 million. I'll explain everything later on so everything is clear to you what Section 179 property really means, so you have a clear idea what I'm speaking about. And the threshold cost of Section 179 property, like that applies to our situation here, we put $350,000. And on line 4, if you follow the math that the IRS is instructing you to have, when you subtract 350 from 1 million, 350,000 from 1 million, you have $650,000. Okay. And so line 5, we have the dollar limitation for the tax year. And in this case here, we put 200,000. And so when you move to section 6, you have to really describe the property here, the cost, business, like the cost that you are going to claim here. So we put the right information, the elected cost 1.2 million. And so line 8, we follow the instructions, 1.2. Line 9, we put 200,000, depending on the math that the IRS instructed to have here. And line 10, carryover or disallowed deduction from line 13 from last year. We hypothetically chose $50,000 here. And line 11, we put the 150. Line 12, we put the 150. And the carryover of disallowed deduction to 2024 to next year, we put $100,000. And part 2 is pretty straightforward. So part 2, they're asking us line 14, we put 75 grand. So again, those numbers are fictional, but I just wanted to show you what this form looks like if you were to file it. And line 15, we put the property subject to section 168F, actually at 75 grand. And other depreciation, including acres, 25,000. I'll explain all that terminology in detail later on. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. So part 3, we are speaking about makers depreciation. So it's one of those things. Section A here, we put makers deductions for assets placed in service beginning before 2023. We put 10 grand here. And section B, this is a form this section is really more elaborate, more granular. So in the if you have any question regarding this session or other sessions, let us know in the comment section and in the comments section, and we'll certainly get back to you. Not a problem. Okay. And so line 22, when you add everything, you actually amount to $335,000. Now the thing is that this number, remember this number, we have to use it later on. And part five here, part 5 is not applicable to our situation, but I still wanted to show it to you so you know how it really looks like. So part 5 is all about listed property. So here we're speaking about things like automobiles, certain other vehicles, or if you have aircrafts or a property used for entertainment, recreation, or amusement. It's one of those things where you have to put the right assets. So this is a part 5. This is how it looks like. And if you have any question, let us know in the comment section, and we'll certainly get back to you. SL means straight line. Okay, SL just means straight line. And the next thing is you have part 6. Now, part 6 has to do with amortization. As I said earlier, when we talk about depreciation, we're speaking about tangible assets. So those are things you can touch. Those are assets you can touch. When we speak about amortization, those are intangibles. In other words, those are assets such as patents, such as goodwill, such as so you have all those intellectual property, rights. Those are assets that they actually provide benefits to the business, but they're not touchable. They're not tangible, so to speak. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about Form 4562. Let me give you the approach you need to really follow here when we think about 4562. So let's first go back and really explain 101, 4562 101. So Form 4562 is an IRS form used to claim deductions for the depreciation or amortization of an asset for tax filing purposes. And you actually submit it along with your federal income tax return every year that you claim this deduction. So this is kind of cool. Now, let's say you are an architect and recently spent some money on upgrading your websites and purchasing new laptops. You also purchased an office space to accommodate your growing team. And so now you want to write off the cost for buying the property and new equipment as a business expense. And now, however, you will not be allowed by the IRS to deduct the entire cost in 1 year. Instead, you can deduct a small portion of the expenses for multiple years by claiming a depreciation deduction on IRS Form 4562. And so when we talk about, let's really dig a little deeper so we have a clear idea. So when we talk about depreciation versus amortization, let's talk about the real definition that the IRS ascribes to those terms. So depreciation is the annual deduction that allows you to recover the cost or other basis of your business or investment property over a certain number of years. So depreciation starts when you first use the property in your business or for the production of income. It really ends when you either take the property out of service, deduct all of your depreciable cost or basis, or no longer use the property in your business or for the production of income. So there has to be production of income. So depreciation deals with tangible property, something you can touch, as I said earlier, right? A car, a laptop, or a building. Amortization is also similar to depreciation, but it's used to depreciate the value of intangible assets, such as I said before, your goodwill, intellectual property, and the cost of starting a business. Yeah. So a lot of startup owners forget that startup costs can actually be amortized. Actually, first of all, they can be capitalized. In other words, you don't have to expense them in 1 year. You can expense them over several years. In other words, you're capitalizing them. So when you capitalize them, you can amortize them over several years. So when we talk about IRS tax form 4562, what kind of purpose are we looking at here? Well, we are looking at a constellation of purposes. This is not just one purpose. We have several purposes. For example, you have asset depreciation reporting, because basically 4562 is primarily used to report the depreciation of assets used in the business. And so you have that. You have amortization reporting. You have Section 179 expense deduction. Let me explain that. So basically, you are able to claim a Section 179 expense deduction. Section 179 expense deduction. This provision allows for the immediate deduction of the cost of qualifying property like equipment or machinery instead of depreciating this over time. So when you choose 179, you are essentially depreciating everything in 1 year as opposed to 5 years or 10 years for that matter. You also have the ability to list property placed in service. So this form requires businesses to list the details of the property, both tangible and intangible, that they placed in service during the tax year, along with their associated cost. You also have a vehicle depreciation. So businesses that use the vehicles for business purposes, they can use the Form 4562 to report actually the depreciation of these vehicles. So I'm talking about, like all kinds of costs here. Not just the actual cost, but also the date of acquisition, the method used for depreciation. This can be makers. This can be a straight line. This can be a double declining balance. So you can have DDB, you can have SL, or you can have makers. It really depends. And you also have computational details for various depreciation methods. And so that's what I just spoke about. So you are able to use different methods, makers. You are able to use straight line or other permissible methods. So makers actually stands for Modified Accelerated Cost Recovery System. You also have a bonus bonus depreciation reporting. So if your business qualifies for bonus depreciation, that depreciation can be reported on Form 4562. So bonus depreciation allows for an additional deduction for certain qualifying property in the year it is placed in service. You also have a calculation of total depreciation deduction. So this form calculates the total depreciation calculation and for the tax year, considering all eligible assets and methods used. You also have pass-through entity reporting. So for businesses structured as pass-through entities, for instance, you have LLCs, you have partnerships, or you also have S corporations. Form 4562 actually is used to report depreciation and amortization, and the resulting deductions flow through to individual shareholders or partners. You also have compliance and record keeping. You have support for tax audits. So in the event of a tax audit, having accurate and complete Form 4562 documentation supports the business's claim for depreciation deductions, helping to substantiate the reported expenses. And you can use the Form 4562 as a tax planning tool, so you are able as a business to optimize your depreciation deductions and manage your tax liability strategically. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about Form 4562. So who must really file IRS Form 4562 here? Well, you only have to file IRS Form 4562 if you actually deduct the depreciable assets on your income tax return. In other words, this is totally optional. You are also required to file Form 4562 for every year that you continue to depreciate the assets. So usually you need to file this Form 4562 to claim any of the following. We're going to put this on the screen so it's clear for everybody. So you have depreciation for an asset placed in service in the tax year for which you'll be filing. So if you place the asset this year, then you have to file a Form 4562 this year. And if you are claiming a Section 179 expense deduction, which could include a carryover from a previous year, depreciation on any vehicle or another listed property, regardless of when it was placed in service. So here, history doesn't really matter. What really matters here is operational adaptability, operational suitability. And if you are claiming a deduction for a vehicle reported on a form other than Schedule C, profit or loss from business, any depreciation on corporate income tax returns other than Form 1120S, you have amortization of costs that began in the tax year for which you'll be filing. So it's really pretty granular, really. So once you have filled up your IRS Form 4562, you need to file it as part of your annual business tax return in the same year you purchase the assets you want to depreciate or amortize. So this is kind of important. And one thing I want to say here is that it's all about how you actually plan your taxes. And it's one of those things, again, where you got to have a clear idea of which tax years really relate to your Form 4562. And if it's the last 5 years or the last 2 years or the last 10 years, it's got to be consistent though. Let's talk about how to complete this form actually. I want to give you a step-by-step guide. So first of all, you want to complete part one. We're speaking about Section 179 election. So Section 179 actually allows you to take an immediate deduction for business expenses related to depreciable assets, including equipment, vehicle, and software. So pretty straightforward there. Suppose you have qualified property eligible for deduction under Section 179. In that case, you need to make an election in the same way you did it for Part 1, Form 4562. And so you have to specify the amounts as well. Part 2, you have special depreciation allowance if you want this. So this type of depreciation only applies to certain qualified property, and it's best to actually meet an expert to get your status right regarding special deduction. You also have Part 3, Maker's Depreciation. As I said earlier, this section is relevant if you want to depreciate the property over multiple years instead of running off as much as possible with Section 179. And Section 4, you have the summary. And Section 5, this is where you actually list the property that really relates to the Form 4562. So remember, this form is used for depreciating listed property, which refers to the business property also employed for personal use. So, for instance, a vehicle that you use for a business and dropping your kids at school. And it's one of those things you have to be specific. And part six here deals with the amortization of intangible business expenses. So these costs are not related to any purchase of physical assets. Instead, they are expenses for intangible assets such as goodwill and trademarks. So to fill out this section, you need to include a description of the amortized cost and other details. And it's one of those things where you have to, again, make sure that you have the proper documentation, because if the IRS were to ask you further questions, at least you want to have all the information that's needed. And when we talk about, I want to quickly go back to listed property, part four. And so part five rather, part five. Yeah, part five is divided in three sections. In section A, you will enter the depreciation allowance for a listed property, but you must have evidence to support the deductions you are claiming. Section B is meant to be filled by sole proprietors and partners to provide additional information on vehicles used for business purposes. And Section C is actually filled up by employers to provide information on the vehicles provided to their employees. And it really comprises 5 yes or no questions, so you don't need to fill it up if you don't have any employees. It's solely up to you. Let me give you a few miscellaneous information before we close to this conversation. One thing I want to say here is that Form 4562 actually should be completed and attached to your tax return. So when you file actually your 1040, you got to really file 4562 along with it. It is not a standalone form, and this must be filed in conjunction with your business or individual tax return. So it can be your 1120S, your 1120, or your 1065 on the business side, or 1040 on the personal side. And so there are limits to how much you can deduct using Section 179, and these limits are subject to change every year. So for the current year's limits, refer to the IRS guidelines or just consult with a tax professional so you have a clear idea. And you can claim bonus depreciation. I think I said this before on Form 4562. Just make sure you qualify once again. And when we talk about the Form 4562, all kinds of vehicles actually they're valid for this depreciation. I'm speaking about buildings, machinery, vehicles, furniture, and equipment, and anything that you are using in a business or income producing activity. Those are eligible for depreciation. And you also have to think about like the fact that there is something called mid-quarter convention. So the mid-quarter convention affect depreciation in a certain way. So if you placed more than 40% of your property in service during the last quarter of the year, the mid-quarter convention may apply. It affects the depreciation calculation, and Form 4562 will actually guide you through applying this convention. So if you have any question on that, please let us know. And one thing you also need to understand here is that when you sell or dispose of property listed on Form 4562, basically a few things happen. And so you may need to recapture some of the depreciation deductions as ordinary income. And so you must file Form 4562 each year to report depreciation for an asset until its recovery period is over or until you no longer own the assets. Thank you so much for your attention. I really appreciate it. In today's conversation, let's do a quick recap here. So I spoke to you about 4562. I gave you the overview, the approach, and now I'm doing a recap. Thank you so much. God bless you. I'll speak to you another time. Until then, remember, stay marvelous.